Hey, what's up, y'all? Welcome back. Today, I'm going to give you guys a full end of year Roth IRA recap, and I'm going to share with you what's currently in my Roth IRA, how it has performed this year, as well as the mistakes I made, like whatever everything I sold and all that, and show you how that affected the overall performance of it, and what I learned from those mistakes. And I'm going to be thinking about how I'm going to position this in 2026. So I'm going to share all that with you guys in today's video. So let's get into it. I'm going to record the screen and share with you my spreadsheet about what's in the portfolio and that kind of thing. Then we'll cover the sold positions so you can see like what mistakes I made, and then we'll cover the overall performance. So let's do that really quick. I'm going to record the screen here on my computer. All right, 3, 2, 1, bam. All right, so here we are. This is where I track my Roth IRA. I'll make it bigger for you guys. So right now, I only have 4 positions. Now, my main ones are right here, SCHG and SCHB. SCHG is basically like Vanguard's VUG. It's just kind of like a basically big mega cap growth. Then we have SCHB, which is exactly the same thing as Vanguard's VTI, which everybody knows, just the overall entire stock market. It's just Schwab's version. And then also we have SoundHound, which this is just like a small percentage of the portfolio, small AI play that I believed in. I bought in, it ran up, I sold, took my initial money out, and just let the rest ride. And I might get back in this later in the year, though. I've been looking at some put options on this, earning some income, trying to pick up some more shares. And then we have Rigetti, which is a similar situation. I bought this one, it's really cheap as well. You can see here my cost average is $12.32. Right now it's $22. At one point it was almost $40. I was up like almost 300% or something. I took my initial investment out and let the rest ride. And again, I'm looking to sell some put options on this as well and accumulate some more shares for the future. And I'm also looking to add some more to this SCHB and SCHG. If you look down here at the bottom, I'm sitting on 35,700 cash. 60% of the portfolio is in cash, which is not really great in a Roth IRA, but I do have a couple things I want to do here. Some of the cash is sitting in SWVXX, which is a money market fund. It doesn't move, but it has 4% annual yield. And I'm just stacking cash there because I might need to pull some of this money out because I'm looking at buying actually a piece of property, and I may need that money for that purchase. So I'm just kind of letting it sit there for right now. But I still am like dispensing some cash into these positions and to options plays. So if you look over here at the performance of this is pretty cool. So far, like Rigetti, see I'm up 87% total return. This is based on the shares I have now, not what I took out already. But you can see it's only 2% of the portfolio. We have SoundHound, 14.5%. This was up over 120% at one time, but I took that money out. So what's left, we're only up this amount here. Very small, less than 1% of the portfolio. Then we have the SCHB here, up 11%, and SCHG up 11.9%, almost 12%. And I haven't had these very long, just for a few months. But you can see 17.5% and 18%. And the majority of this is cash. Now, the important thing I want to share with you guys, though, is actually what I sold, because I think this put some things into perspective for you guys, and then we'll cover the overall performance of the portfolio for the year. But here, it says Roth IRA 2025. I started a new sheet here for 2026, but in 2025, these are all the positions I sold. Let me make it bigger. So you can see at the top here, we have OLT. I sold this January 2025, but I had this through the entire 2024. And you can see after a whole year of holding this, I only walked away with a 4% total return, right? For a whole year. But if you go back here to this, like here, we have SCHB. Let me show you this really quick. You can see my total return on this one is 11%. And if you go to here, you can see when I've actually bought this. I bought this in June. So from June to December, we had 11% return. But when you have like something like this OLT from YieldMax, I had it for an entire year and only had a 4% return. So, and that was reinvesting 100% of the money, which you do in a Roth because you can't take it out. So some people buying these high yield dividends in these IRAs, it just doesn't make sense because 4% after a year, when you can get, 11% in a few months just by just buying the market. So, it doesn't really make sense to buy some of these. QDTE here, this one I sold in, when did I sell this one? January, but I didn't have very many. It was just like a placeholder. Then I decided I didn't want it, so that's not important. I had YMAX and YMAG, both. I sold those both in January. It wasn't super large positions, but you can see the returns, total return of 3.2% and 6%. So again, the returns weren't very good compared to just buying the market and holding it. Tesla, we walked away with a 0.5% return. We have Coney here. This was a negative 2%. QDTE, I bought this again, 3%. So this one did much better, but not great. YMAG beat that. But none of these did exceptionally well, except for this one here. Maybe Misty did okay. You can see I had quite a bit of money in Misty. There was 18% return, which did pretty well. But right now, if you were holding this through the whole year, man, you got hit really hard, and the dividends didn't make up for it. We Ride, this was a Chinese play. I bought 13%. This is just a trade. XCTE, I had this for a long time. I sold out of it, 6%. But this 6% is not terrible. Rigetti, 257%. That's the one I told you I took my money out. And then 78% on SoundHound. Then we have QQI with the 8%, which was pretty good. These are pretty good plays there. But you can see the difference in this thing compared to, the returns I'm getting now. And I'm going to share that with you guys to show you, some of these high yield dividends are not very good for investing in a Roth IRA, really. But I would say like this QQI is pretty good. 4.8 on the market return and 8 on the total return by reinvesting. 8% return per year is not bad. And you're getting income to, keep putting back in the portfolio. So something like that would be pretty ideal for me to add to my portfolio this year. And I might do that. We'll talk about that in a minute, though. Let's go look at the overall performance. So here is my portfolio performance. You can see here the rate of return. This is just the entire performance of the portfolio. So from January 1st to December 26th, I only got an 8.3% return. And why that is because you have a lot of this stuff here dragging it down. These single stock Yomax things like this. Look at the returns on this, minus 43, minus 54. It's crazy. But, they said the total returns are a little bit better, but not much. Like you're pretty much getting flat. So it really dragged the portfolio down this year and hurt the performance, which was 8%. We'll see how that compares to the rest of the market for you guys real quick. So you can see compared to the Dow, look here, we dropped significantly down right here. This is during the tariff time, I guess. And see, even the Dow was negative on the year, minus 10%. We were down 23 at the very bottom. And then, we clawed back up, but 16% compared to 8%. The Dow outperformed us big time. If we go look at the NASDAQ, similar situation. You can see here, we both dropped below, went negative for the year here for a short spell. And but NASDAQ was minus 11%, minus 20%. And it clawed its way all the way back up here and closed the year 22 or 23%. We closed 8.5%. So that's NASDAQ outperformed us big time. S&P, similar situation. You can see the S&P drawdown wasn't as bad, though, only 13% or 14% at the low, almost 15%. We were 27% down. Wow. And then you can see both clawed their way back, 8.3% and 19.3%. So S&P beat us big time. And then the Russell did a similar thing here. You can see it chopped around while we were going up. But then we both came down at the same time. And at the peak, they were negative 20%. We were negative 27%. And then we both climbed up, which I climbed up much faster. And which I started getting into more S&P stuff, or the entire market. But at the end of the year, look, the Russell passed us up again because I had some other things in the portfolio dragging it down, like WPay, things like that. And it hurt pretty bad. And you can look here, 15% compared to 8%. But now, right now, I'm in position to, you can see here, I've got SHG and SHB. These are, really, really great stocks with great holdings in them, or great ETFs with great holdings in them. And you can see, I'm in position now to follow the market and do what the market does, as opposed to, relying on those high yield dividend stocks. But that being said, I may add one. And if I do add one, it's probably going to be like an SPYI or a GPIC or possibly T-SPY, one of those three, just so I can stay indexed, stay with the entire market, but get some growth and some dividends, and not something that's just going to go negative and pay income. I want growth, but I don't mind having a little bit lower growth as long as I get income coming into the portfolio to keep buying more stuff. That's the only purpose of buying a dividend play in this portfolio for me, because I want to be focused more on the growth, because I can't touch this until I'm 59 and a half, and I'm only 44 now. So that's just my thoughts going forward. Short recap really fast, basically just to show you, put more money in SCHB and SCHG. I'm probably going to add right here in this empty slot here, I'm probably going to add SPYI, something like that. And then I'm going to continue selling options on these two and maybe one more. I'm looking at SMCI as the options play, because something that I believe will do good over the next few years. But these are just temporary positions here. Only SCHB and SCHG are permanent. So that's basically what I got on my mind for my portfolio for 2026. Just keep adding money here, add the income play, keep adding options, and keep adding money to the portfolio. So that's really all I got for you guys today. Just want to share that with you guys and show you some of the mistakes that I made, some of the stuff that I bought that really hurt the performance of the portfolio. And I want to share that with you, how bad it hurt, if it didn't do nearly as well as the markets did. And as you can see clearly in my, actually I'll just put it here for you guys really quick. I put them all up here. There you go. They're all there now. And you can see mine's the blue one. Mine's the in last place there. So yeah, the high yield dividends really did hurt the portfolio. And this year, I'm not really looking to do that, except for maybe one, but it's going to be one that's based on S&P 500 or the NASDAQ, and it's going to grow and not just erode my capital. And the rest of this money, it's going to stay right there in the overall market. And SCHG, the growth, my big cap growth. So that's the plan. That's all I got to share with you guys for today. Let me know in the comments what you think below. I'd love to hear your thoughts and what you're doing in your Roth IRA. And come check out my other channel if you want to see my income portfolio. And I'll see you guys on the next video. Y'all take care.